Hello, welcome to Wednesday's video. As a recap, first and foremost, yesterday we did a couple things which we told about the option trade. First off, let's take a look at Hewlett Packard Enterprise. Now, it wasn't a really big deal, but for 75 cents per spread, and that was the 1821 spread. That was what we put out in the live trading room for Tuesday to take advantage of this trade. I think I shared that with you on the YouTube channel. What prompted the upside bullishness was pretty much the volume indicator was starting to show a little bit of interest. You can even see on balance volume in here was starting to show an uptrend, but the relative strength was starting to see some outperformance. That's the PMC indicator turning bright blue, trending higher. And, the anticipation was that it would at the very least re-challenge the highs, if not take it out. So what we were looking at was for the market, if it was only going to go X so far, right, the distance, not going to blow off into the stratosphere, but we were kind of targeting a move between 18 and 21, and that was the June 7th, which expired this Friday, paid 75 cents. Now, for the record, we did blow out of those today at 185 and 195. So those are done. Got those out on the open, on the open. You will find many times, what I do is I will always tell people to get in, and in the live trading room, we always post before the open or during the market to take advantage of getting out. So if you can double your money, and in this case, we paid 75 cents, dumped on average, let's say 185, nice trade, move on. That's all it is. But last night I did and went a little bit step further. I talked about a small company called Wolf with the scans, and that's in the cryptocurrency today. Look, up 12%, almost 12%, 30%, not a big deal, but right off the get-go, it was a nice little trade. We shared that with the room community this morning. The other one was Coinbase. We shared with you last night. And just to follow up, how did those signals work? Coinbase today was up 2.6%. So from the open today, it did fairly well. Let's double check. We also put out Square. Square today was up marginally, 60 cents, not phenomenal. But I think the bigger winner was, of course, price-wise, not, and again, almost a 5% move today was ServiceNow. And that was a trade based on the high closed doji, and we had improved volume readings. It was starting to look a little bit better. Came up, filled the gap. All right. In after hours tonight, we have a couple of really wild, distinct things happening. First off, Lululemon, and while I didn't have a trade per se in Lululemon, I did give the trading community, I said, listen, this is a bullish convergence. This has made a newer low, and this is making a double bottom higher low. So the indicator is making a stronger higher low, not a weaker low. Price made a weaker low, which means selling has exhausted itself. It was just mixed, and I'm boatloaded with a bunch of stuff. And so therefore I did not take the trade. And I'll let you know when I do and when I don't. But at the very least, I gave the insights that if someone wants to be long, they were probably targeting at the very least to fill the gap. Not only did they fill the gap, but in after hours market, it's already up to 345. Now, here's an interesting trade right now that's developing in the after hour or extended hour market, 5 and below. This stock was at 132. The stock in the after hours market or in the extended hours market traded as low as 109 and change. So, sometimes we get in the extended hour some really gifted bargains. Let's take a look at, do I have any support targets down in here? It blew through quarterly support at 117, and we go all the way down into the lows not seen since May of 22. Right around this 109, 110. It's exactly what it paused into. That's a little on the, what I would say, egregious overreactive side in 5 and below. Now, on those, I don't know how to explain them. In the old days, they would be called not a 5 and dime, but a discounter retailer for shelf goods, right? And stuff. There's Dollar General. There's 5 below, and there's DLTR, Dollar Tree. All of them just absolutely gotten smacked in this environment. Because right now people aren't really interested in taking a look at cheap stocks for retail consumers. It's all about technology. Today's move in the market was about Microsoft. It was about Meta. It was about a little bit about Apple. All the heads of the 5 families. Googs went up, and it started with CrowdStrike. So CrowdStrike's earning is what really accelerated. Hewlett Packard, which we took a part of, as you can see. Those were the big, and Guidewire was another one. So it was all pretty much elemented or targeting towards the technology elements. What's not really performing well, and we had a big day in a lot of different things. NVIDIA, there was some huge volume action. And I want to talk about this because last night I also talked about volume in AMD. Huge volume in AMD. There was more volume in the 160 strike puts that expire this week in AMD than there was in the actual daily volume and the 10-day average volume. That was AMD. What did AMD do? It did not go down. It actually went up, but it had a weird day to it, right? It opened higher, traded off. It didn't really go anywhere. It just sat there up 3% in the middle of what I'd say fair value. It really hasn't moved anywhere. The only one that's really going anywhere in a rocket ship launch is NVIDIA. Now, is NVIDIA going up on great technicals? And honestly, it's not. And I did notice that going out to the June 21st, there was some decent volume. Now, those are probably the June 20. I think it was the June 21st expiration. We saw some 1,100, 10,000, or the 1,000 strike puts with some decent volume. So someone's targeting a move between now and the next 2 weeks to fill this gap and possibly fill that gap, or they spread that off. And that's like a 14 delta trade at that point. So it doesn't matter if it's a 14 delta. I mean, if you think about it, market drops 200 points and it's a 14 delta. That's a big return on equity. It just says that someone going out in time looking for a correction. Maybe it's a hedge. I doubt someone's selling those premiums like a hedge fund. I doubt they're selling that premium. I would have to say that something just doesn't look right with NVIDIA's launch. And I have not initiated a sell or a trade to go short NVIDIA, but I will point out, if I get another PPS sell signal under volume bearish divergence patterns, I'll reevaluate that and more likely put a quick option where it's defined risk strategy to take advantage of maybe short-term relative weakness in NVIDIA. So that's something we will keep you abreast and share with the YouTube crowd and you guys. So moral of the story, let's take a top-down approach, something that not a lot of people look at, but this is something that I think is very important to see what the overall condition is. Is this time to get aggressive in the market or not? Light volume rallies in the Dow, very light volume rally in NASDAQ Composite, light volume rally today according to the OBV. Let's double check something in the Qs. We blasted off the advanced decline 76. Yep, had a good breadth, but we've made a new closing high with less than spectacular breakout leading the way of breadth, and volume is lacking. So maybe there's a day or two that it's going to be delayed reaction. So don't get in a hurry to sell this market up here. But I would have to say, if we get another day of a launch to the upside and the advanced decline doesn't support making a new high to support new highs in price, if volume doesn't go up to help support new highs in price, odds are we get some kind of a pullback, and more likely, when would that be? My guess next week, Jay Powell, something like that. Looking at the S&P 500, we generated a PPS buy yesterday, and the market went up. Today's advanced decline, 322 advancers in the S&P. A new high close for the S&Ps. Where's the advanced decline? Sharply lower than where it has been. So this is kind of the element of maybe we could go up another 1.5, maybe 2% up. If we don't see confirmation of a newer high in breadth, that would be kind of a more of an intermediate term bearish toppy pattern. After all, this is the John McClellan oscillator. It's been modified to reflect the stocks in the S&P 500. We changed a little bit of the moving average components. And ironically, it's below the zero line. that's not a great healthy sign, which means it could get up to the zero line. You get a sell signal, and we get what we call or referenced as a zero line reject. Market gets oversold, goes up to the zero line, and then it has another downside. Another thing I'm not a big fan of, this is average true range. When markets go up, they go up soft and smoothly, and they're not jerky. And the ATR, the 10-day in this case, the 10 days, you can see it says 10. The 10-day ATR tends to go down or sideways. This one's rising. When markets go up and they're excitedly very, very bullish, the volume expands. Volume's not expanding. So this might be just another one of these, I don't know, a bull trap a little bit, but you got to kind of ride it, and you can't get short. So you got to be careful what you're in. Let's go straight into the scanners. We had CrowdStrike and a great move in CrowdStrike, and said cybersecurity. Here's a company that is the epitome of cybersecurity, Fortinet. It did generate a little bit of an upside move today, $1, well off its highs. Hasn't really participated in the rally that we've seen all year in the S&P or the Qs. Look, it was in December. It just hasn't really gone anywhere. So it's actually lower than where it was in 22. And you can see that in the end of 23, we're negative on the year. So what's my point? The point is that it's in the sector of cybersecurity that a stock had a blow-off rally on earnings reports, and this stock didn't really get much sympathy to it. So when an entire sector doesn't, like, if every stock and some of the leaders in that sector, so Fortinet would be one, Cloudflare would be another. Let's take a look at Cloudflare. I mean, it was barely up. I mean, up $1.96, which is a less than 3% move. You'd say, John, but it was a 3% move. Yeah, but it couldn't even get back to where it was a week ago. In fact, CRWD, CrowdStrike, great earnings. You know, the funny part is it didn't get back to where it was either a week ago. So it just had like come back to fair value where it was. These are not really strong breakouts. And so therefore I would just caution that it doesn't look like anything really all that exciting based on today's action. The indexes is great, and it looks great, and headline news, and new highs in the market. But when you look at spreading the wealth, just a small subsector of the market, cybersecurity, the three top names, CrowdStrike, Fortinet, Cloudflare, and they only got back based on a really good earnings of one of the guys that says, man, people are spending money like no tomorrow on our product, and the stock can't even get back to where it was a week ago. Then, you know, maybe there's some hesitation in the market. And that's what can be dangerous for chasing breakouts that aren't that strong. And that's the key point I want to make. I'm not really committed to wanting to sell the market, but today, if you look at high closed dojis, there was a few. Taiwan Semi, different story, had a breakout. Where's the volume? It's negative. That volume indicator right there is kind of a weird thing. So again, let's circle back to AMD. Remember that trade I talked about, all that volume. Here's a move that went up. Just because the market went up today by a lousy 4% or $6, look at this market looks like it's in a trading range. So maybe someone had, and as you can tell, the volume momentum indicator and the relative performance was weaker. I'll expand this chart so you can see this a little better. The volume momentum weakened on our day the market went up, and the relative performance of the market, while it is still positive, did not show like huge strength like we would want to expect and want to see it outperform relative to the overall market. Maybe we give this a little bit more time, and we have to watch for that. So for tomorrow, I would say let's take a look at a couple little metrics that I like to focus in on. CrowdStrike today had 3 times its average 10-day volume, 15 million shares today versus 5. Okay, great. It's up 12%. It just means whoever got out of it, they got back in it. And so they're back in it at, oh, yeah, look, it's exactly where it was back in the day of old, like over here in February. We haven't really gone anywhere. Since February, all this stock has done is gone a little bit higher, pumped it, dumped it, pumped it, dumped it, even Steven. So CrowdStrike's actually even Steven on huge volume. Zscaler, everyone will love this one. So should we be buying Zscaler? It's a little cheap. relative to where it was in February. Again, it's lower than February. I would have to argue that it's something we kind of have to just watch. The market looks a little bit stronger, and you should be careful because Microsoft today up 2%, big move, $8, $7.94 move. Look where it ended up. It didn't even take out the highs. The big winner of the day happened to be the cap weight effect of Microsoft, or excuse me, Meta, Facebook. Where did Facebook go today? Kind of funny. It went back. It didn't make a new high either. So if you look at the market internals a little bit and say, hey, there was some good news today, but are all of those names leading the charge? And how are other stocks doing? Oops, wait a minute. Starbucks was down today. Disney was down today. Comcast. Why do I look at Comcast? Comcast actually owns, if you're familiar with NBC, CNBC, Golf Channel, and Xfinity, of course. And Comcast, in its subsidiaries, is going to capture a boatload of money this political election charged year with advertisement revenue. Both the Trump and the Biden campaign has raised mass amounts of dollars to advertise. And the people behind making these commercials are busy little beavers with all kinds of images on both sides. And it's going to be just flooding the TV waves and as well as social media. So everyone's like frothing at the mouth. Who's going to be the winner? Is it going to be Disney with ABC subsidiary? Is it going to be Comcast and as a boost? And my 2 cents is Comcast is another one that's not getting any attention, and certainly didn't get any attention today by being down 42 cents. But somebody likes it with the weekly volume improving and the monthly volume. Nobody's selling it down here. But it didn't do well today. In fact, nothing really, ag stocks were negative on the day by a big amount. I mean, some restaurants were still down on the day. Technology was up, and I shared with you the interesting aspect. Some of the stocks were up today, but man, look at Salesforce. This stock goes from 314. And if I'm not mistaken, it actually had an intraday low somewhere on earnings in the extended hours. I think it was even cheaper than that, somewhere around 196-ish maybe. But at the end of the day, these stocks just didn't really, even Salesforce didn't have a great participation day. Yeah, it's up $3, but it's down from a week ago. It still didn't recover from its earnings, which beat, by the way, top and bottom line. So how does this make me feel about the market? It's giving me a false sense that of bullishness in the market, and the media might be putting out, hey, look, the headline news is going to be another new high in the stock market. And people are going to look at their portfolios, or maybe they're going to look at their 401ks and go, I'm not seeing it. Delta Airlines, maybe in transportation. Nope, didn't make a new high. CSX, rail. Actually, this is the scary part about the market to consider. The transportation, IYT, and you would think if you make a widget, if you have big orders, if the economy's growing and things are doing well, or if you're getting container shipments in from abroad, specifically China, and we got lots of stuff to fill the shelves of, let's say, Five and Below or Dollar General or Dollar Tree, and you have all of this stuff, you got to get it on a rail. And then from a choo-choo train, maybe you put it on a truck. So let's take a look at JB Hunt. That didn't go anywhere. Okay, maybe it's maybe Knight Swift Transportation would. Nope, that wasn't them either. This looks horrific. Bottom, and so it's either at the bottom of a trading range, but it ended up negative today. And the other one is ODFL, Old Dominion Freight Line. So there's a disconnect between truckers making money shipping things and shipping rates. And that's kind of maybe that's the secret in the sauce, that the economy is cooling, that it would allow the Fed to lower interest rates. And here's the connect the dots, which is hard to figure all this stuff out. If the Federal Reserve starts to lower interest rates, it cools off a little bit of the returns that someone might get in T-bills. And as the market in T-bills and treasuries go up, remember, this is in the futures markets, we have, when bonds go up, yield goes down. So we do have yields pulling in, When yields pull in or yields come down, people don't get as much return on their money. They may be more attracted to dividend yielder or better companies in the stock market. So we might be getting right now, taking advantage of how are we looking at some of this transportation and looking at UPS and maybe taking a look at FedEx, even Norfolk Southern. I mean, the whole transportation sector, it's not one stock, it's multiple stocks in every subsector. Most of the rails, most of the truckers are all lower. And that might mean there's less demand for shipping products. And that means inflation will come down. And that bottom line means the Fed can lower rates and the market will get a goose out of that ahead of the election. So where should we be positioned? An interesting concept this morning that I mentioned to everyone is that Goldman Sachs initiated coverage on a small little pharmaceutical company called Jazz Pharmaceutical. The market was up 2%. Now, our newsletter, or what I put out on a week-to-week basis, we're a little ahead of the schedule here. We're long a company called Biogen. I'm also long, and matter of fact, you can kind of take a look at and freeze frame this. We have long exposure to Russell, Etsy, AT&T, Tyson, Best Buy, Boeing, Pfizer, Newmont Mining, Enphase. So people are asking me, look at First Solar. I didn't take First Solar. I took Enphase. We bought it. We got out of half the position at around 117, 116 and change, and we raised the stops on the balance just above break even. Halliburton, this trade we just got knocked out of, lost a little bit of money there, belonged from 37 and change, got out of 35 and change. Valero. And so as far as new trades this week, we were looking at trying to get, if there was a dip in Apple, I'm just resting open orders there. And then Kohu, a semiconductor that did not get filled. Bottom line is I do have exposure already to Biogen, and Biogen was up to 236, 1% move. So I'm kind of liking the biotech, and some people are claiming or thinking that perhaps lower interest rates will help the drug and biotech sector. I don't know who makes that connectivity, but as you can see here, sector seasonality trends for the month of June, biotech. So we got ahead of this already. Computer technology, utilities, and grains, drug companies are the most bullish subsector seasonality in the month of June, right? Bottom line is we've got some exposure. Instead of First Solar, we have a little bit of energy with ENPH, Enphase, like I said. And I think if we get more of a breakout, sustainable price action above these old pivots and this old resistance, this old red line, this old blue line, these highs, if we can get another couple days staying above that level, the relative strength still looking good. If we can see that, it just might finally attract more volume. And that, my friends, that volume is what I call the lifeblood of the market. One of the reasons we got in it was we had a decent volume and PPS buy signal to get into the trade. And as the market rallied, the volume wasn't really doing well. We got out of half and raised our stop. Didn't get stopped out. We're still in half position. So at this point in time, I just wanted to throw out to you, if we're going to see recovery in the market, obviously the subsectors that should do well would be some utilities, and we should start to see interest rate sensitive names, and specifically, wait for it, I'll bring it up to your, try to bring it in focus right now, and it should be here pretty soon. It's regional banks. This is the sector that if interest rates come down a little bit, should do well. Why? They start writing business for maybe car loans. People start doing maybe their local bank and maybe a mortgage. If someone got a 30-year fixed mortgage at 8% last year, if you get rates down and they can get their mortgage rate back down to 6.25%, you might get some refi business. And then the banks and especially the regionals will do a little bit better. Anyway, that's down the road, and that will be for, if I'm not mistaken, tomorrow. The European Central Bank most likely is moving to lower rates. How much, I don't know. That'll be the key. And we did have the Bank of Canada lower their interest rates. But the key is what we do. And we had ADP employment numbers came out a little bit weaker in the private sector this morning. We'll see if we get a lower number than expected, and anything lower than, say, 190, 185 in the headline number for the monthly jobs report on Friday. My belief is the market will go ape nuts because why bullish pop to the upside short term? Because the Fed may be perceived as saying, hey, demand's coming down, the economy's cooling, it's going down below trend growth, and therefore our projection is that we might be able to cut rates, and the market would get excited about that in certain areas, especially the interest rate sensitive. If not, back to the drawing board. As we come into tomorrow, here's one that's kind of interesting. Jumia Technology is a Chinese company, and we have a few Chinese company exposures, JD, BABA, BABA. And if you're interested, you can take FXI if we start looking at improved numbers coming out of China, and what might be for some that be a little bit more aggressive, yin. It's a 3-time bullish ETF on exposure to China. So that's kind of some of the areas of what the daily high close dojis got. A lot of healthcare. This is all biotech, and a LABU is the 3-time leveraged ETF, which, by the way, let's take a look at my screen here. So we were focused on LABU for this morning. So that's right there. And this is in the daily trade room, that what we kind of look at. And this is, again, the volatility index, the VXX. I look at that instead of the VIX because it's tradable and has volume. If people are very bearish the market, they start buying puts or they start doing option strategy hedges, and that it helps to increase value in the VIX. The VIX futures is the VXX is based off of 2 front contract months of the VIX futures in anticipation that there's going to be more worry. People could also trade the underlying ETF, which this is. If people are, instead of buying options and say, hey, I'm nervous, I'm going to hedge my portfolio position and go with volatility, they'll buy VIX. If they buy VIX, you want to see volume trending higher. So if you get a, like say, a little buy signal, a breakout, you get a volume convergence, meaning price actually goes sideways to down and volume starts to accumulate, you get an idea that there's probably a little bit of nervousness and you get a bounce in the market. But as it is right now, just to give you an example, today, the volatility moved lower and on lower volume. And that means probably we get some follow through strength in with tomorrow's excitement based on the European Central Bank and the weekly numbers. But after that, my friends, we'll take it one trade at a time. For new, fresh scan ideas, one thing that I would point out, I think at this point, I'm not going to more likely take any new, fresh trades tomorrow morning ahead of the numbers. So, but the scans show some financials improving. Obviously, the biotech space, and if you have to look at biotech, AMGN is one name that everyone kind of has been in. It looks okay. Gilead looks sickening, and it looks sickening because, look, it went from 88, it's at 63. It's really, nobody's really picking it off. And when a sector goes up and then one stock goes down, and its relative performance via the relative PMC indicator that we created, Person's Market Catcher, PMC, when you have negative relative performance, until you get improved relative performance, improved volume, stay away. So Jazz Pharmaceutical being covered by Goldman Sachs. Volume today wasn't fantastic. Relative strength improved a little bit. Something we'll keep our eye on. And as far as the next day or so, I'll update you on conditions and scan. And if you want, I'll just go up and down the universe. You can freeze frame this. You can clearly see what we had today with new fresh buy signals. Big volume trades. Archer Aviation, I think they're in the news that they're going to get cleared for doing taxis today. That was air taxis, Archer Aviation. And what else do we have? So, there was a lot of like kind of junk stuff. Snap-on tools, high close doji, that might be something that could be construed as bullish if the Fed lowers interest rates, not the European Central Bank, but the Federal Reserve. So we'll see what goes on. Zion Bank Corp, Northwest Bank Corp, a lot of regional banks today started to get a little bit into the groove a little bit with small little buy signals. They're just oversold. There's no new trend. I need a really strong move with relative strength improving to tell me to go with it. All right, so let's be more transparent. What about sell signals today? What sectors just dove? Regional bank MTB. That's, I don't know if that would construe it as a crash and burn. Wendy's, I don't know if that's a crash and burn. I mean, Wendy's has been on the way down. And as you can see, that's it, man. 63 names. And Elbit Systems is an Israeli defense company. It's pretty thin. It goes up and down like a yo-yo over the last year and a half. So it's always in that. And that's about it. So nothing really worries me. There's AMC networks. I don't trade AMC with the ape. Or I don't think we call them apes anymore. The Wall Street bet it. Anyway, this is kind of like it's a gamble. It's just let you know it gave a daily sell signal with weakening volume structure. So that's one that I would say trade on your own. Bristol Myers is sad to see this. Look at this trade from 80 straight down to 41, 50% valuation decimated, but the long-term volume is improving. So I would not want to get too crazy bearish on that trade. I'd wait to see if we get a buy signal, and I'd actually go long because it looks like somebody else is anticipating there's going to be some buying going in here in Bristol Myers. Keep your eye on that one. From an oversold dead cat bounce perspective, you might get something out of it. That concludes tonight's review. Again, 5 and below and Lululemon today. Lululemon recovers, and 5 below just absolutely implodes in the extended hours. Here's 5 one last time, trading at 112. I think intranight low was around 111, 109 and change. Have a great evening, and we'll repost things. And as always, if you want to know a little bit more about what we do here, come sign up in our live trading community. We do active alerts. You sign up for those alerts as well. We are launching our next week. Go to the website, personsplanet.com. You can get under the header where it says courses and seminars. We're launching our 3-week class, which we do annually. It's Wednesdays for the next 3 weeks, and we're going to be covering how to set up your scans. 2 platforms we generally tend to use would be Thinkorswim, Charles Schwab now, and TradeStation. So we'll be using that, how to set these up, look for scans, what they mean, and how to read the indicators correctly, and then applying that information with how to use the right option strategy. And we'll cover how to protect your hedges on individual stocks with collars, how to look at vertical spreads, why we target certain strike prices, as well as looking at one of my other favorite, more directional in a trading for a earnings play instead of doing just simple butterflies or iron condors, how to learn to do an unbalanced or broken winged butterfly, which will give you a little bit more delta if you're right in a directional move, so that you're not, because more times than not, most people can say, hey, I'm good in direction. I just can't tell you it's going to stay and get stuck at this precise point at price forever until option expiration. So anyway, these are the things we're doing, and it's exciting here. And we would love to try to help you improve your trading from Persons Planets, all our indicators and the work that we do here. So good night. Thank you. Until next time, have a great evening and good luck tomorrow trading.